The following is a presentation of TFNN. Now, the author of Mastering Probability, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the May 16th terrific Thursday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, and I absolutely, folks, absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that truly is what it's all about. So let's go look at one of our tools. This is the tool I call a happy person is not a person in a certain set of circumstances, but rather a person with a certain set of attitudes. Question. Always good to start the day off with a question. In fact, you always do anyways. We all have questions. That's what controls our focus each day. Let me ask you this question. What do you see, the donut or the donut hole? Is your glass half empty or half full? Are you an optimist or a pessimist? Look, two people, they work at the same company. I guarantee, for those of you that are employers out there, you're going to know exactly what it is that I'm talking about. You're going to think I'm talking about two employees that work for you. Two people work at the same company, make the same amount of money. One often complains that they're underpaid. They arrive at work dreading the day, and they leave tired and discouraged. The other is happy to have a secure job, enough money to pay bills, and leaves happy to be heading home, feeling good about what was accomplished during the day. Does that sound familiar? Question. Who's the one that will get the promotion and the salary increase? Who will get further ahead in life? Half empty or half full? Optimist or pessimist? Who is it that you're going to hire out there? You already know the answer to that. Even if you don't have employees that work for you, you know the answer to that. Look, the simple things in life can bring you joy. If you look at them with a positive attitude, you can get out of bed each morning ready to make the day an adventure. In these markets, that most certainly is the case. So you get out of bed, you make the day an adventure, or you can stay under the covers as long as possible, rush to work with your mind and body already weary. Folks, it's our attitudes that create life's circumstances. True story. A man once stopped in the train aisle before two fellow passengers who were playing the game of chess. One of the players, a teenager, was about to give up when the man noticed that the young lad had one more move. Now, the young lad asked the man to sit down and take his place, and taking over, this gentleman made the one move that changed the rest of the game. In fact, he went on to victory. Now, in the game of chess, sometimes there's not one more move, but in life, folks, there always is. Several years later, this young lad who was on that train playing chess was serving in the military. Cut off from his company, he was alone in a foxhole. The enemy patrols were closing in on him. All seemed lost. But he thought back to that chess game, and he remembered that in life, there is always one more move. Now, in the most authoritative voice possible, he ordered his adversaries, he demanded his adversaries to surrender and save themselves. And in one move, his adversaries laid down their arms, and they became his prisoners, folks. It was his attitude that created life's circumstances. Always remember, there is always, always, another move out there. A happy person is not a person in a set of circumstances, but rather a person with a certain set of attitudes. Well, let's go check out the attitude of the markets here right now. We've got it's basically pretty flat out here. Seems to be the norm last couple of days as we've come into the market open. You've got the Dow futures trading off about 5 points out at 15,230. ES Mini off a 1.5, trading at 1652. NASDAQ futures up about 6 points, trading out at 3006. Russell 2000 off a couple points. King dollar back about 9 ticks right now, trading out at 83.86. We've got the euro up about 24 ticks. No real big, huge moves here in the major currency pairs out here. Gold back $17 right now, off of its session lows. Gold trading out at $13.79. Talk about off of its session lows and stopping just before the swing point. That would be high-ho silver. That swing point we're looking at is $22 even, Steve. And so far, the low of the session, $22.06. Right now, trading out at $22.46. Light sweet crude up 29 cents. The bulls are taking control of light sweet crude. It's trading out at $94.59. We've got platinum back $13 over across the pond here. Over in Europe, we've got the DAX down 9 points. FTSE off 2, so no big moves going on in those markets. Over in Asia, we had the Nikkei trade down. How about that? I know you think that you're mishearing something, but the Nikkei actually pulled back 58 points, so no big deal out there. We had the Hang Seng up 38 and the Shanghai up 28. Our call-in number is 877-927-6648. Would absolutely love to hear from you. Give us a call if you want me to take a look at your equity, currency, commodity. Doesn't matter what it is. Be happy to look at it for you. If you're watching us on Tiger TV right now, you're watching my screen. I've got basically 8 different quadrants out here, what I consider to be the things that we should be watching today for signals in the marketplace. So if you are listening in on the radio or your mobile device at tfnn.mobi, thank you so much for doing that. Remember, you can always go to the homepage of tfnn.com. On the upper right-hand side, you'll see a little button with 3 smartphone devices. Click on that. That will go ahead and you'll get the live stream of the show. And as always, this show is archived on Channel 9. The upper left, we've got the King dollar. It's got a confirmed A to B equals C to up. That is the daily chart that we're looking at. We'll go back and we'll take a look at that. Just to the right of that is high-ho silver. We can see that it made its low at 22.06 volume-wise so far today. I've got to expand it out here in order to see the volume. I'll do that here just momentarily. Right now, we're taking a look at 25,000 contracts. Of course, that's going against that major low from April the 16th that has 200,000 contracts. But silver has stopped just before the swing point. Not a good deal out there. Could be just simply getting ready for a little trampoline to the downside. Next to silver, we've got the 30-year Treasury. 30-year Treasury here, if it closes today above, I've got to move this out here just a bit. You get a close above the 144.22 mark. That'll signal a reversal in bonds out there. That'll be setting up an A to B equals C to up. To the right of that, we've got the ES Mini, which is sold off just a bit on some of the either the jobs or unemployment news or the lack of housing starts out there, but hasn't sold off a ton. Lower left here, this is a key chart for sure. This is the Euro Japanese Yen cross rate currency pair. This is a key. In fact, if we take a look at this here right now, what you'll notice, just simply by applying this great Fibonacci expansion tool that I've got on this software here, we can see that the high that came in on May the 14th out at 132.76. That happened to be a 1.618 expansion of swing points. Those swing points being the high of April the 22nd, 130.65, all the way down to the low that was put in on April 29th, which, by the way, that was a 0.618 retracement. That low on April 29th, 1.2704. You take the difference of those two, you multiply times 1.618, you add it to 127.04. That's the low of April 29th. That'll take you up to the high, approximately up to the number of about 132.76. We also have a 1.272 expansion out there as well. That expansion off of the April 11th swing point high, that level being 131.109 out there, and the swing point low that you would be using is the April 16th number. That April 16th number being 1.2494 out there. So you've got some fairly significant resistance out here at the 132.76. Had a nice little bearish engulfing candle yesterday. Some follow through today. That, folks, will be signaling a reversal. The question is going to be just how deep, how long, how much pain, or will there be gain? If you take out these highs here, then the markets should move higher out here. At least that would be the signal coming from the one currency pair, the one set the one currency cross rate that you really should be paying attention to, because this has more impact, more information coming out of this with regard to the direction of the market than anything else that is out there, at least anything that I have been able to find. That is the Euro Japanese yen. So we're going to want to pay close attention to that as well. We're certainly going to want to pay close attention to Basil's VIXI out there. That's one of his girlfriends. That's the VIX index. So we'll see what that does here today. We talked about the bulls being in control of light sweet crude out here. As we take a look at this, this is the contract for June out here. Yesterday's pushed lower. Big push lower out there. And what do we have forming yesterday? You got it. One of my favorite candles out there. We've got the hammer candle. That says that the bulls are really defending $92.13. Light sweet crude actually has a confirmed A to B equals CD up into at least 98.94, more likely 101.28 out there. And the bulls do not want to give up their positions, even though this candle right here on May 10th is not a hammer candle. There just simply wasn't any kind of trend lower. It looks, it smells, and it gives you enough information when you take a look at who was in control of that session. The Bears early on, the Bulls towards the end of the day. So the Bulls here, you've got to give light sweet crude, my opinion, you've got to give light sweet crude off to the Bulls here right now. They are doing everything possible to keep the price up. Don't know why. I just know that they are. Now, the beauty about yesterday's move, quite frankly, is that low of 92.13. You break that, and I don't mean break it by testing it. I mean you close below 92.13. If you're long, you're wrong out there. Now, the next area of support, not that much further down, is 90.11. That's the swing point from May Day out there, May 11th. But you break that hammer low, and I think that if you can break that, if they can break that, if the Bears can break that, and I'm not talking the Chicago Bears, I'm not talking the Chicago Blackhawks, who broke my heart last night when they beat my Detroit Red Wings out here. But you break that hammer low, I think the Bears, they'll be able to take out $90.11. You'll see light sweet crude get down to $85.90 post-haste out there. 877-927-6648. We'll be right back, folks.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces. And over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. In the pre-market here, leading the charge to the upside. Believe it or not, it's Tesla Motors. TSLA is the ticker symbol. Up another $10 or so this morning. They closed at 84.84, trading out at 95.90 just on the last trade. Solar City, SCTY, having another nice day out here. They closed at 32.16. They're trading out at 35.60. Kohl's, the retail store, they were out with numbers before the bell. KSS is the ticker symbol. I like that little kiss out there. They generated net income $147 million versus $154 out there. Let's see if I can see the top line numbers here. Q1 sales $4.2 billion versus 4.24, so roughly about the same. They did close, as I mentioned, I think 49.68. They're trading at $53, so they're having a nice little bump. We had Cisco out with earnings after the bell yesterday. They closed at 21.21. They're trading at 23.75 right now. Cisco generated, let's see if I can see it here quickly. I don't see it here quickly, so we'll just simply move beyond that. We've got SunPower, SPWR. They were up yesterday as well, up this morning. 2065 was their close. They're trading at 22.07. We've got, how about this one? Diamondback Energy. How would you like this for a ticker symbol? FANG. FANG. That closed at 29.48. They're trading out at 30.42 right now. To the downside, the leader, somebody's taken a bite this morning, an apple a day. Well, right now you've got Apple trading down at 4.25. It closed at 4.28.85 last night. We had Walmart out with numbers as well. Walmart comp sales. Let's see if I can see what we've got here. Operating income of $6.46 billion versus $6.39. We're talking about Q1 comp sales. Let's see, down about 1.4% in the first quarter out there. Walmart getting hit just slightly here. They were closed at 79.86, down at 78.20 right now. We've got Rio Tinto, RIO. They closed at 44.38. They're trading at 43.46. Let's see here. Bristol Myers Squibb, BMY. You thought I was going to say BMW. BMY out there. They closed at 44.34. They're trading down at 43.73 right now. We've got Barrick Gold, ABX. They closed at 19.44. They're down about almost 40 cents. Last trade faring up at 19.06 out there. Let's go take a look at Goldilocks here. We can see gold now trading inside that April 16th swing point. That says it wants to get on that fence. It wants to test that 1321.50 level. If we take a look at the retracement here, just simply off of that, the low all the way up to the high that was put in on May 3rd out there. That high is 1487. You'll see we are below that 0.618 area. That's 1384.80. So we'll just simply call it 1385. You're trading at 1377 right now. Volume so far really not that bad. 117,000 contracts. Of course, that's going into 700,000 contracts. Looks like 1357 is at least the number that we should see Goldilocks get to, but I suspect it's going to be 13 to 21.50 out there. And again, back at the larger picture of silver, we'll go ahead and pull that chart up. We'll widen that out here. Again, just in this case here, taking a look at the continuous contract going against the low from April the 16th, $22 even, Steven. 200,000 contracts you are seeing there. And so far this morning, let's see here, where's it? 26,000 contracts. But the low so far, 22.06. Would have been better for the bulls. Would have been better to see a test of that area and still hold. We got a lot of time left in the trading session, but if it doesn't test it here today, if it just hovers down in this area, and we know that silver here has been trading with inside the swing point from April 16th for most of the time period, with the exception of really maybe three trading sessions. It has closed. Silver has closed underneath that high of 23.97, so it has been showing its weakness out there, and $17 is really the number. When we take a look at silver, that would be the nice buy setup. But we're going to have to see what it does here at the swing point, as well as watching what goes on with Goldilocks as well. Let's go take a look at the U.S. dollar index. King dollar, truly the king out here. The U.S. dollar index taking out its B point, a large A to B equals CD now set up. That B point is April the 4th. That high, 83.66, 20,000 contracts. That was taken out 2 trading sessions ago on May the 14th with 44,000 contracts. You take a look at that, A to B equals CD. Your A point, your straight line move is the February 1st low at 78.92. The B point we just talked about, now the retracement, and it was shallow Hal. It was a shallow retracement down at 81.37 on May 1st. A 1-to-1 A to B equals CD. That takes it to 86.12. Nah, that's not where it's going to go. It's headed to 87.41. 877-927-6648. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. TFNN is excited to launch our brand new software charting program, The Art of the Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, Art of the Charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. Art of the Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow off 15 points, trading out at 15,259. S&P down 2 at 1656. Composite up 5 points, trading at 34.76. Russell 2000 off 2 points, trading at 986. Google up 5 pennies. Apple down $7 and change. Microsoft unchanged. Intel up 17 ticks. Cisco up 12% this morning, up $2.57 right now. Leading the charge, the upside, it still is Tesla up $7.50. Right behind them, we've got F5 Networks up $5.52. Solar City is number 3, up $3.05, edging out Netflix up $2.70. Kohl's is up. Cavium, CAVM up a couple of bucks. Diamondback Energy, Fang out there has got its good fangs out, up $1.85. Citrix Systems, CTX S up $1.40, IBM up $1.60, Constellation Brands, Stella, my favorite beer out there, that STZ, that is up $1.48. Salesforce.com, haven't seen Salesforce.com on my screen here for a while, up $1.33 out there. That's up about 3% this morning. Apple leading the charge to the downside, off $8.50 right now. Newcastle inventory in Newcastle something. I think that's just a spin-off. So we're going to NCT is their ticker symbol. We will just bypass that. LinkedIn. We'll take a look at that stock chart. Still has that island reversal out there. I believe LinkedIn off a couple of bucks. Google now joining the charge to the downside, off a couple bucks and change. Security, National Financial, that's off 26%. Is that real? SNFCA, what is that? Well, we'll take a look at it. I don't see any news behind it. Off 26% here this morning. Celgene, one of the other leaders out there, CELG, off about $2 this morning. NetEase, NTES, off about 4%, down $2. Walmart, let's start off by taking a look at Walmart out here. That is trading down just a bit, trading out at 78.11. As we take a look at the Walmart chart here, if you are watching us on Tiger TV, we can see the bears lining up at the highs out here. The bears really started off, well, you can start off here at the April 10th level, little dark cloud cover candle. That was the first time we saw any bears really show up inside this equity, other than a little bit of bearish look to it on the trading session of March 6th. But otherwise, on the dance up here, off of this, what almost is an island reversal here on the bottom, was very close to it. Nice gap up here on February 21st. If you are watching on Tiger TV, you're seeing this little rainbow convergence out here of these lagging indicators, which are great because they can give you an idea as to the momentum behind a equity out here. That black line, that happens to be the 8-day exponential moving average. The red line is the 21. The blue line is the 50. And the green line down here, that's at the bottom, that's the 200. When you get them all lined up like this, it's telling you there is some momentum in the equity. Well, you can even see this morning with the move down, still some momentum inside the equity out here as well, but you can see the bears really lining up across the top here. You got the shooting star on April the 15th out there. That's a bearish reversal signal. You got a little bearish engulfing candle on April 18th, also up at those highs. We got another one right here on April 24th, and one more on April 29th. Just look at the bears hanging out around this area here. You can see that yesterday you got Walmart really trying to take out that level, 8 million shares to the upside, taking on volume of 8 million shares, so I guess a little bit of undecided work. So the bears here really trying to defend their position. You get up over that, that would be significant because of the bears defending a position and not being able to hold it. In fact, you could really just take a look at it and say, well, what we've got here is just a short-term consolidation sideways move. You could take a look at that, and you could say that that sideways move about, we'll call it 79.50 down to about, we'll call it 77.50. So you're taking a look at another $2 move or so, $81.50 if it can close above it, which it did yesterday. So that is what it's trying to do, and even today, it's just trying to fend off the mere fact that the same-store sales were down just a tad. So it looks like $81 and change is where Walmart wants to head to. That's on a very short-term basis. If we go take a look at the monthly chart does tell the entire picture, and that picture was the 13-year consolidation that it broke through. That 13-year consolidation was from the highs of December 31st, 1999, that level 70.25, and that was broken inside Walmart with some conviction on July of 2000. The month we're looking at the monthly chart, by the way, that was July of 2012. That move, that is from, we're going to call it, what, $70 down to a low here of, we'll call it 41. So it's going to be a nice, 29-point move out there inside Walmart, 29 on top of 70. That's going to take you up to 99. We'll call it 100. So that is really where Walmart wants to go to in the long term. If we take a look here, just for the heck of it, October 31st had 144 million shares. That was the swing point. Last month, you were up over it with 165. So how about that? Even Walmart now has on the monthly chart, he confirmed A to B equals CD up. If we take a look at the A point that you would use, it's right down here, that little hammerish style candle on August 31st, 2011. That's the longer-term A point. Your B point is the October swing point high. That was taken out with volume. And if we come down, not much of a retracement into December 31st. Just out of curiosity, what is that A to B equals CD? There you go, $96 to $104. So now you've got a couple of different confirmations with regard to Walmart and where she wants to head to. Again, that daily chart utilizing those four different different lagging indicators out there. You're looking for that rainbow convergence. Speaking of rainbow convergences out here, well, there's one to be had. There's one that we need to be paying attention to. That happens to be right here inside the NASDAQ, the NQ, the 30-minute. We hadn't looked at the futures contract yet today, but we are right now. You can see here what we've got is you've got the 8 period above the 21, above the 50, and above the 200. And what we know on the NASDAQ futures, she is trying. She wants to be the little engine that could. She is trying as much as possible to get back inside that rising price channel. All that occurred yesterday on the move up, on the bounces up, was an attempt to get back in, but no, the Bears said not going to happen out here. Looks like we'll get another chance today, or it will get another chance today to try to get back up into that area. What's that price point going to be? I would have to say you'd have to estimate it somewhere around 3,000 and maybe 15, another 6, 7, 8 points higher, something like that. But that's on the NQ. You can see just the beginning of that little convergence, that little rainbow convergence out there, and it works on the intraday charts, works on monthly charts, any chart time frame that you want to actually use out here. Let's go take a look at some of these stocks here that are popping and dropping. What the heck is this? William Lyon Homes offering net proceeds for growth capital. So must have an IPO here, trading out at $23.28 right now. So we'll skip over that for sure. But let's go take a look. Let's go back and take a look at Tesla. Let's go see what Tesla is doing. That really is one of the leaders in the clubhouse out here. I thought I had this on my screen, but apparently I got rid of it this morning. So we'll add a TSLA is the ticker symbol, and that is gapped up this morning. So this thing has been a little bit of a rocket ship up here. It has not been able to take out its May 14th high, 37 million shares out there. So this thing has been, if you're in this, congratulations, but be careful inside this equity. As far as where you'd have some stops in this, of course, it depends where you are inside this equity, but this thing could easily come back to its breakout area, and that would be May 9th. That would be 63.69. Comes back down there on light volume, then you go ahead and fire away. Even if it came down and closed the gap, that would be nice. That would be in about the 58.20 level out here, but that's on Tesla, and so a lot of hoopla behind it, and I know they're pushing out some additional paper, so congrats to them for doing that. Let's go take a look at Cisco. That's up 12% this morning. CSCO is the ticker symbol, and let's go see what that is moving into. Gapping up, big volume behind the move here this morning, so let's go ahead and pull this back. Let me just refresh my chart, make sure that we've got all of the active data out here, and we're going to have to go ahead and actually pull this back. But if we take a look at this morning's gap, so far it is up on 50 million shares, so that's taking out any kind of swing points. The March 11th swing point is 29 million shares out there, so you're looking at a large A to B equals C to up potentially here in Cisco. Not really potentially, I mean that's really what it is that you're looking at. Now if we take a look at that A to B equals C to, we'd come back here to draw this. I would start off all the way back here at the B point of April 2nd, 2012. That was 30 million shares, and start with our low from August 9th of 2011. So let's take a look at that 1-to-1 A to B equals CD. There's our A point, our B point. Our C point on this is going to be the July 25th, 2012 low. It's gapped up above that, which is 23.01. That was your 1-to-1 A to B equals CD. That was a longer term A to B equals CD. Let's take a look at a A to B CD, AB equals CD within an AB equals CD pattern out here. In this case, we'll start with our old C point. That would be July 26th. We'll make that our A. We'll make the B point be the highs out here in March of 2013, right around 21.97. Not much of a retracement there. That 1-to-1 would take you up into about the $27 range. So Cisco looks like he wants to head to $25.20 to $27 or so. Clearly, though, in the overbought territory. What that would do for Cisco is take it into, let's see here, it's got a big, huge downdraft. It looks like that's where it's going to run into some real resistance. We'll go ahead and pull this stock chart back onto a weekly, but that resistance really coming into that 2460-ish range. If we take a look at that downdraft out there, 552 million shares on 11/11/10. not 11-11-11 out there, but 11-11-10. You had 552 million shares to the downside. Those folks are going to be happy right now just simply to take their bread off of the table, and that's why this should run into some resistance up at around these levels. If we take a look at the longer-term chart, at the weekly chart, inside Cisco here, what a wide-ranging bar there. Now, Cisco, here's a great example of hammer candles. So apparently I looked at a weekly chart some time ago, and in hammer candles here in Cisco, when you break a hammer, if you're long, you're wrong. Well, we saw this in Cisco back here on the weekly chart back in February of 2011. It broke that hammer candle. It broke another hammer candle back on May 27, 2011, when it went all the way down into the price level of 13.30. Now, that first hammer low that it broke back in February of 2011, that was at a price point of 18.23. So that was a pretty good move down inside Cisco. Right now, if we take a look at the weekly chart shows the B point that you would use would be April 6, 2012, 169 million shares. The first time up and over it was with 162 on March the 8th. The second time up and over with the test was on 157. This time you're up with 129 million really through yesterday for the most part. So this should have enough volume on the weekly to confirm that A to B equals CD. So this is a little bit easier look at it. And that says 25.11. At 25.11, you can see runs right into the brick wall out here in Cisco, and that is the high of November 12, 2010. That, again, 24.60. So that's the daily, and that is the weekly out there. Let's go take a look here at, let's look at Apple. It's off about $2 here this morning. So let's go see what she is doing. I think I've got that on this chart right here. No, I don't. Let me switch to a different tab out here. We're going to switch to Show Tunes, Show Charts. I think I've got Apple here. So we do have Apple. It's off of its lows. Apple wants to, well, let's see. If we take a look at volume, yesterday Apple pushing, this is a daily chart, so pushing into the lows with volume. 26 million shares yesterday. That was going against 22 million shares over on the left-hand side of the chart into April 29th. So looks like Apple wants to move all the way back down. Now, what Apple has done is gotten very close to the 415.91 mark. 415.91 is the sweet 618 retracement off of the low from April 19th, 385.10, all the way to the high out there on May the 7th. Had yesterday's volume not been 26 million shares, but more like maybe 16 million shares, then you would have seen Apple pulling back on lighter volume out here and perhaps setting up a art of the chart, timing the trade out there, that type of A to B equals CD. But no, you had Apple pulling down with volume yesterday. Says that what it now should do, not only hit 415.91, but 402.36, and if it gets down there, it should go test that swing point low on April 19th. And that's what we all want to see happen. Why? Because on that monthly chart, we got that hammer candle. And that's where we really get a release of information out here, and that would be 385.10. If you see that hold, you see it hold on lighter volume, you can fire away long, because then, folks, your back is up against the wall. And if it breaks and it closes below 385.10, you just flip your position and you go short, because that says Apple would then head down to 317. 877-927-6648. Flat market. We couldn't exactly go barefoot water skiing, but pretty close. The S&P off $1.49, Dow off 15, the Russell 2000 off $1.40. So slight chop, but very slight. We'll be right back, folks.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. The Dow now up 7 points here. S&P totally flat, up 15 cents. Composite up 6. Russell 2000 slightly back, down $1.29. In the commodities sector here, right now, gold still off $16. Silver making a big charge, though, down only 16 pennies, but boy, stopping right before that swing point. That is never a good thing. Light sweet crude still up a tad, up 39 cents. The bulls truly trying to defend that position. Let's go out to Paramus, New Jersey, to Victor. Victor, thanks for calling. Thanks for holding. How are you today?
Yeah, what do you see with Facebook right now?
You know, Facebook right now, it's trading out at 26.02. Are you looking to get in? You looking to tell me what you're doing?
It's at the same price it was almost on expiration as last month. So what's it? What do you think it's trying to say? And the volume's picking up a little bit, I know.
Really not that bad. When you take a look at the volume, what you would be benchmarking against, Victor, would be the lows here of December 28th. There was 56 million shares down there. You would also be taking a look at the November 26th area, 123 million shares. And that price point area was really defended back in March 27th, 52 million shares. So yesterday's pullback on 30 million shares, to me, that's light volume. So far today, you've got 8 million shares, so you got decent volume in the first 30 minutes of trading. We'll see what happens today, but it's also not down to those areas. Where you make a call on this is when it gets down into the price point of 25 or so. It starts moving back down in there on less than 39 million shares, because that would be the least volume of test of that general area. Then what you're looking at is really a sideways consolidation range out here, in the top of the consolidation being about $29. But it would be a place where you could take a look at taking a long position. So far I don't see the. What's that?
Around 25.15, you think, the 9-day moving average?
25.15 to 24.81-ish, right around there. That's the level that it really should hold, and it's pulling back into those areas on light volume here. So not a lot of upside. But what's that?
Expirations have something to do with it. Expiration,
I'm sure expiration has something to do with every move inside every equity. But with regard to a buy. As long as it's pulling back into this area here with light volume, it's okay to go ahead and buy it. It has had limited upside potential, but it does have and it's got a little volume off the top. It's going to need some work. It's just consolidation area, but that would be the area to go ahead and take a look at taking a stab if you want.
Worldwide Monster, MWW Monster.
Monster Worldwide. Let's take a quick peek here. MWW. Are you in this equity, or are you looking?
I was thinking that should be a buyout target or something. Maybe LinkedIn will buy it, or somebody will buy it.
Oh, geez, no idea there, but it did have a nice little breakout here on May the 2nd here. So if it pulls back into that level around 450. Or 425, 440, just for that a reason alone, because it had a nice sign of strength out there. You could take a look at maybe stepping into that. All right, my friend. Hey, thanks so much for calling. Yep, absolutely. Let's take a quick peek here. One more stock before we head off of the air for this morning here. Let's see, what is pulling back the largest out here? Not a lot. Percentage-wise, it is Infinity Pharmaceuticals, INFI. Let's just put that on the screen here. That is gapping lower. Oh, that looks pretty nasty. That is, it's coming back into an area that it recently broke out on December the 10th. We'll take a look at that during the next show. Folks, if you're off to start your Thursday, I want you to have just simply a terrific day out there. And always remember, you have an amazing power within yourself. And that power is so strong that it'll create a life of abundance, cure incurable diseases, build billion-dollar businesses, paint magnificent masterpieces, but most of all, folks, it'll create fantastic, loving families. Thanks so much for being a part of the TFNN family. Have a great day, folks. Look forward to seeing you soon.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.